before Parliament. How we did this, so we first undertook an overview of wheeling to understand what is the landscape of wheeling currently looking like in South Africa. We also then just analyzed what the key scenarios are. So I'll get to those in a minute, in terms of what the various scenarios are when you're looking at wheeling. We then performed a stakeholder analysis where we engaged with some key stakeholders, specifically Eskom, City of Cape Town, and eThekwini, to understand their views on the wheeling landscape in South Africa and what they believe is necessary to increase facilitation of wheeling within municipal distribution networks. We then conducted an international case study. As I said, we looked at the United States and California. The main reason for looking at those countries or specifically India and United States, is we wanted to analyze a country with more or less similar socioeconomic circumstances that we have in South Africa, and that also went through the electricity reformation process that we are currently undertaking within South Africa. And that's why we looked at India. And then on the other side of the spectrum, we wanted to look at a country that has a totally different circumstance and socioeconomic circumstance to South Africa, and see how wheeling played a role in stabilizing the electricity grids in those countries. We also then looked, it's not on the slide here, but we also looked at African examples of wheeling, other African examples, and specifically we looked at Morocco, with Morocco providing a very, very rich renewable energy. It's renewable energy is very much supported by the regulatory frameworks in that country, and I'll get to those aspects in a few slides. And then we also looked at Namibia, who's also gone through the electricity reform process recently, and to see whether from these four countries there are lessons that can be learned. Some of these lessons don't directly relate to wheeling, but indirectly they would, with time, increase the facilitation of wheeling. And there are certain key principles that are linked to wheeling that we will also unpack, in the study. These principles, as I said, are then outlined to help standardize and support wheeling within South Africa. An overview of wheeling. So in terms of the most conventional scenario of wheeling, it's the Eskom wheeling scenario, where there is a generator, Eskom, and the customer involved. There will be a connection agreement and a wheeling agreement between the generator and Eskom, and there'll also be a amended supply agreement between the customer and Eskom, all backed up by a power purchase agreement with the generator. The second scenario, Eskom and municipal wheeling. In this circumstance, there is the municipality to be aware of, and the municipality will be required to reflect those wheeling transactions in existing supply agreements with Eskom. All of this, again, backed up by the power purchase agreement between the ultimate off-taker and the generator. Wheeling with electricity traders, we definitely, and with some peer reviews from colleagues, the role of the trader is becoming more and more important. And it's very important for us to understand, with the increased role of traders in the electricity system, how does wheeling look then? We do believe that this is a very new aspect within the wheeling landscape that needs to be unpacked in further detail to really understand how wheeling works. We also, to a very short extent, looked at virtual wheeling and how that impacts municipalities. Again, a very new concept, and I do think that there might be some work on it today, but definitely a very exciting landscape for South Africa at the moment in terms of understanding how virtual wheeling would also work. The current wheeling arrangements in South Africa. So this was primarily based on a desktop analysis. The exact number of wheeling arrangements in South Africa is not currently known, and there's no existing database that you can go and look at what these existing wheeling arrangements actually are. We know that just about a month ago, or yeah, less than a month ago, obviously, the city of Cape Town launched the first pilot project with 15 commercial electricity suppliers, um, starting to sell electricity to 40 commercial customers using the city of Cape Town's grid, which is a significant milestone in relation to the facilitation of wheeling within the Western Cape's wheeling framework. Um, then in July 2020, we know that the city of Ekurhuleni signed an agreement with Taraco that it would also be able to facilitate wheeling to supply the customers there. Then the oldest wheeling arrangement currently known is that of Nelson Mandela Bay, which signed a 20-year wheeling agreement with Amatola Green Power. And it's also on the back of this wheeling arrangement that many other municipalities look to the Nelson Mandela Bay wheeling framework to also develop their own municipal wheeling frameworks. The city of Tshwane also took numerous steps to facilitate wheeling in the last couple of years. The most well-known project at the moment is the Bio to Watt project from the Bronkhorstspruit biogas project that supplies electricity by means of wheeling to BMW South Africa. When we look at the regulatory analysis, I won't go into too much detail, but this is more or less an overview of what we looked at. And we looked at the key policies, regulations, and rules associated with wheeling in South Africa. The Electricity Regulation Act being the most principal aspect that we looked at. And the key, and this is also based on the international best practice analysis, which I will get to in a minute, is the key aspect behind wheeling is that there must be the principle of non-discriminatory access to transmission and distribution grids must be embedded within your regulatory system. Currently, Section 21.3 of the Act specifically allows for that and requires that actually to happen. The on-the-ground application we have found is different in South Africa. So although we have a very strong principle being brought through of non-discriminatory access in the Electricity Regulation Act, what actually happens on the ground is sometimes a little bit different, and I'll get to that in a minute. Then Section 34 provides that NERSA may facilitate the conclusion of an agreement to buy and sell power. It's not open to NERSA to then determine the actual commercial terms itself. We do understand that under the Electricity Regulation Amendment Bill, that the role of NERSA will be strengthened, and to a certain extent, where they will have the authority to then also approve tariffs, and set certain guidelines in terms of what the maximum tariffs be. That's also going to play a role in how we see wheeling rolling out within the next few years. The biggest change we've seen, and this is also related to the data, if you look at the amount of electricity generators applying for licenses and registration rather for NERSA with NERSA, is that removal of the 100 megawatt threshold. This means that any generation facility, irrespective of its size, may be exempted from the licensing, subject to the provision that those generation facilities must comply to the grid code and be registered with the regulator. So there are definitely strong principles supporting wheeling in our regulation, in our Electricity Regulation Act. But we are then moving forward, as we all know, to a new piece of legislation that's currently before Parliament, and that's the Electricity Regulation Amendment Bill, which will establish a competitive wholesale market within the South African landscape. To ensure that the third parties are not discriminated against, they will be granted access to the transmissions and power systems to evacuate their power, their generated power. So again, echoing that principle of non-discriminatory access. But there is, again, the need to then introduce additional measures for ensuring that that non-discriminatory access is actually provided for, and I'll get to that recommendation in a few slides. The system operator shall not discriminate, again, against any generators or customers, again, echoing this principle. And we do believe that for the wholesale market to be established in South Africa, and this was also a clear aspect that came out of the international case studies, is that once you do establish a competitive wholesale market, electricity wheeling naturally occurs at a greater scale. The electricity pricing policy sets out certain principles in relation to wheeling. Specifically, clause 2.6 of the pricing policy provides that there needs to be non-discriminatory access. The cost to operate the networks must be reflected in your use of system, system charges. And then any incremental wheeling costs. I think, Astrid, you are not on.
Rudolph, I think you might be on mute now.
Apologies, I don't know what happened there. The wheeling of the electricity, I was at the electricity pricing policy, can only be done in terms, you can recover those costs in terms of the connection charge, and then a methodology for transmission and distribution wheeling included the treatment of network congestion must be developed by NERSA. The third-party transportation and energy rules, the rules provide for guidance on prices and tariffs relating to wheeling of power and reinforces the principles, again, of non-discriminatory access. Section 12 of the rules specifically deals with wheeling and sets out the key principles in relation to wheeling arrangements. An interesting observation was that Section 6.11 determines that the use of system charges must be fixed and indexed annually against CPI. Now, we know that the use of system charges are calculated by dividing the total cost by the total sales. And should those sales drop significantly, what we've seen is that the use of system charges rises significantly, irrespective of that CPI provision in the rules. And what then happens is, because the costs are not then directly linked to CPI, municipalities run the risk of under recovery of revenue as well, and of the costs associated to maintaining the net distribution networks. Then the distribution network code and distribution tariff code. The distribution network code sets out the basic rules for connecting to the distribution system. There must be clear guidance in developing unbundled. The distribution tariff codes provides that there must be clear guidance for developing unbundled distribution use of system charges. Again, it also requires for licensees to develop tariffs that are consistent with this code. What we've seen is the code does not oblige municipalities to follow a very specific methodology. And this is a critical issue at the moment, because we are seeing varying approaches from various municipalities on how they approach this. Again, this calls for the need for standardization and for clear guidance to municipalities to really help them standardize the approach of setting these tariffs. The international case study analysis, and this is really where we got some very interesting lessons from other countries. So if we're looking at India, as I mentioned, India went through a reformation process themselves, and a few key elements that we identified that helped support the increased uptake of wheeling from India is specifically the deviation settlement mechanism. This is not something we have in South Africa. And what this actually means is it relates to an imbalanced charge that is applied when there is an overconsumption or underconsumption or overgeneration of electricity in that country. So how it works is if a entity continuously overdraws or underdraws electricity for more than 15-minute time blocks, it's counted as a violation, and that entity is then penalized by means of a sustained deviation charge. What's also interesting is large-scale renewable energy projects is located again in resource-rich areas, far from the major load centers, similar to the aspects and the geographic circumstances that we have in South Africa, for example, in the Northern Cape. Similar aspects in India, where these solar resources are located far from the actual load centers themselves. And as a result, the interesting bit is that the Central Electricity Regulatory Commission implemented a concessional transmission charge for solar PV projects, exempting them from the payment of transmission charges and losses for interstate transmission. So again, we're seeing this incentivization of wheeling and the ability, financial incentives being introduced to facilitate wheeling across the states in India. Another interesting aspect that we just wanted to highlight was from South Africa at the moment is very much focused towards developing our green hydrogen economy. At PwC, we've been very involved in the development of these national strategies. And what was specifically interesting to us is that under India's national hydrogen policy, the renewable energy actually used for the production of that green hydrogen is exempted from the wheeling charge in India. Again, an interesting thing just to consider how wheeling also fits into other sectors and something like green hydrogen at the moment, which is a very topical issue in South Africa. So very interesting lessons from India. These are just two of the key ones that we identified, with some more being unpacked in the report. When we turn to the United States, again, the share of renewables, specifically in California, which is a very renewable resource-rich state, has posed considerable challenges in terms of balancing the supply and demand for electricity. This is known as a duck curve, and it arises from that imbalance between peak electricity demand and the generation of renewable energy to be able to supply renewable energy during that peak period. One noticeable measure to combat this was a bill that they introduced that where investor-owned utilities within that state needs to procure a certain amount of large-scale electricity storage. Again, this is something that we find very interesting, because if we were to explore, we are currently exploring battery energy storage components in South Africa, and this would also be a key consideration that if as we increase renewable energy in the country, there will be a definite need for backup storage. And that backup storage, the electricity and electrons from that is also it needs the facilitation of wheeling in order to get those electrons from the storage facility to the ultimate off-taker. Again, the wheeling can take place within the United States, within the same state, or involve multiple states. And what we've seen is there's definitely standardization from the states in terms of how they deal with wheeling. Again, in the context of South Africa's move towards a wholesale market, the responsible entities for this in the United States is the regional transmission operators and the independent system operators, and they facilitate and ensure that these aspects are standardized in those countries. Again, an interesting aspect and very similar to what we have in the South African Income Tax Act that helps support the increased uptake of renewables in terms of financial and tax incentives. The Federal Energy Regulatory Commission in the United States established investment tax credit that allows for the deduction of a certain percentage of investment from taxes proportionate to the charging time associated with those renewable resources. And they also introduced a production tax credit that is a per kilowatt tax credit for the electricity generated by solar and other qualifying technologies for the first 10 years of that generator's operation. So very much we can see that they've already started thinking about how renewables must be paired with battery energy storage and how those electrons then needs to flow perhaps from one state to another or um, within the same state by means of wheeling. Some very interesting financial incentives also introduced in the United States to support renewable generation and then by implication also then the need for increased wheeling in the country. When we're looking at Morocco, Morocco is, in our opinion, one of the more successful case studies in terms of the African continent, where they've reached almost 100% rural electrification, and they're a lead performer in the implementation of their renewable energy strategies. More than half of the country's electricity is generated by private generation plants, and there's significant private participation in the distribution sector as well. So again, this is where we want to head towards in South Africa with more private generation, and Morocco has been very successful with their reformation policies to ultimately come to a point now when more than half of the electricity produced is from private generation. In Morocco, they introduced the renewable energy law that authorizes IPPs to sell the power generation directly to industrial clients connected to high voltage and more recently also to medium voltage networks. Again, so similar to what we're seeing in South Africa, but only at a greater scale. But the key principle we really drew from the Morocco case study is the concept of energy not delivered. And this is the case where if there is various reasons for the unavailability of the network, the electricity will be delivered to the final consumer directly by the respective generator on behalf of by the authority on behalf of the generator. In the case where the transmission system operator, like we're going to have and has now been established and licensed in South Africa, is unable to supply that electricity to the final consumer due to some sort of unavailability of the network, the IPP is paid an energy not delivered charge in accordance with the terms of conditions of the associated connection agreements and the PPA. Now, why this is relevant is we definitely see this as the wholesale market is established in South Africa, that there's going to be a need to consider the aspect of load shedding in relation to wheeling and in relation to the actual transmission of the electrons. So we do believe that a similar approach would need to be considered as the wholesale market unfolds, where if the electricity is unable to be transmitted from the or delivered to the off-taker as a result of load shedding, that a similar energy not delivered charge would need to be paid by Eskom to the IPP. So this is something that will require still a lot of research in exactly how that needs to be done. In recent discussions with Eskom, they also mentioned that this would be something that they would need to consider in the future going forward. So while they're not looking at it at the moment, it's definitely on their horizon to think about what happens if there is energy not delivered as a result of load shedding within a wholesale market sort of environment. The Namibian case study, in terms of the Namibian case study, also they went through a lot of electricity reform and energy reform in the energy sector quite recently. They introduced the modified single buyer model as the new market model for the electricity sector in Namibia. Some of the key aspects that we pulled from there is um, the opening of the market happened in a stepwise approach that outlined a market code to move from a vertically integrated system to this more wholesale approach. This is very much something that we would need to look at South Africa to see how they have done this switch from a typical vertically integrated system to a more wholesale system or a hybrid system at the moment, where they have both the competition as well as the regulated markets. This is also something that's being considered in the Electricity Regulation Amendment Bill, where we will have the establishment of the wholesale market, but we will also still have the central buyer agency that will be able to um, take over those legacy contracts and the regulated contracts. The unbundling of existing tariffs and development of new projects and services to facilitate bilateral transactions. This was really a key one in terms of what we would need to do in South Africa is the unbundling of our tariffs to be more cost reflective and to specifically identify what the actual costs are associated with wheeling. Namibia has done this successfully, and they've been able to introduce unbundled tariffs in the country. Then participants who are out of balance will pay a regulated imbalance charge. Again, this links to the same principle applied in India, where if you are, there's a tolerance band that's been introduced with lower and upper limits where there will be no penalties applicable. But if you go outside of that tolerance band, you will be required to pay an imbalance charge for your overconsumption or your undergeneration, and only the negative deviations will attract this balancing payment. Again, something to be considered in South Africa, and something that Eskom would have to look at introducing is this imbalance charge, so that they charge in the cases where there is overconsumption or undergeneration that they then need to cover. This brings me to the key principles of wheeling that we've been able to unpack as part of the study. Regulatory reform recommendations. So based on the study and the regulatory analysis, we have been able to say that, yes, in South Africa, we do definitely have key principles and key aspects in our regulatory framework that support wheeling. But when we consider the amount of reformations that other countries have introduced and how those reformations has led to increased wheeling in those countries, we do believe that we still have a lot of work to do in terms of getting our regulatory framework ready and creating the necessary enabling environment to support wheeling going forward. So introducing a market structure that's in line with the Electricity Regulation Amendment Bill. What we've seen, as I mentioned before, is as soon as you start moving away from a vertically operated system to a more wholesale electricity market system, there's a natural increase in wheeling, but that would need to be supported by enabling rules and regulations. In terms of the market structure itself, the requirement for the IPP procurement to follow capacity allocations as set out in ministerial decisions based on the IRP, we must consider the role of the IRP and the fact that it might be hindering the rollout of wheeling to deliver electrons across a more open market structure. We would also need to update the access rules, and they should be amplified from a tariff framework to include a framework for the non-discriminatory access by third parties to the Eskom transmission network and the Eskom and municipal distribution networks. These rules would need to be complementary to a market code. We are yet to see what this market code is going to look like, and this is also based on what we've seen in Namibia and in India and also in Morocco. The market code is going to be essential in order to unpack how exactly this market structure is going to work. So although the Electricity Regulation Amendment Bill may or even may not be passed within the next year due to it being so close to the elections in South Africa, there's still a lot of work that needs to go into the actual implementation of the provisions in the bill. And one of those would be to develop the market code um, that would support this. The market code would need to establish the rules for scheduling for each of the markets, the day ahead, the balancing market, and also introduce an imbalance pricing methodology specific to and also specific congestion management rules. The need to consider a regional lens. We are going through this transformation process in South Africa, and what's typically happened in the United States, as I mentioned, it's a much larger country, and they need to consider what happens within each state in order to make sure that there's standardization. So we do believe that there needs to be a regional lens in terms of how South Africa operates in a cooperative energy market in relation to the Southern African power pool system. Any alterations that we make in South Africa would need to be cognizant of what's happening in the South African power pool. And we do believe that given our energy infrastructure and the generation capacity, that we could become a real key player in this regional market, and that South Africa should adapt its market structures to harmonize with these existing market segments. So the SAP already has a day ahead and an intraday and week ahead market. So there's a lot of lessons that can also be learned close to home in terms of the South African power pool as well. Again, some more regulatory reform recommendations. The need to expedite Eskom unbundling. From the international case studies, it's clear that there's a need to it's clear that the unbundling of the electricity value chain is a prerequisite for the development of competitive electricity markets, with accounting separation between the key functions of the electricity sector at a minimum as a first step. The lesson from India, reform should consider South Africa's context and the impacts beyond economic efficiency, and consider the need to keep prices affordable for the poor, vulnerable, and small and medium enterprises. Again, what's seen in India, it's not specifically in this presentation, but they have considered the introduction of subsidies where there is, for example, a loss in municipal revenue as a result of wheeling. So again, key aspects for South Africa to consider in terms of introducing similar approaches to subsidies. A lack of unbundled tariffs that would properly affect the associated costs and charges would affect Eskom's ability to reclaim such charges and costs. So again, the need to develop these unbundled tariffs, and it is also to a certain extent supported in our current rules, but there would need to be clear guidance on how these tariffs must be unbundled going forward. Enforcing municipal participation. In some instances, research has shown that municipalities are hesitant to enter into wheeling arrangements. Now, there's a few factors contributing to this. One of them is the fact that there's a lack of capacity within smaller municipalities in South Africa to be able to implement wheeling. And what we found is that this has also been an aspect that municipalities has highlighted. They're unable to, for example, understand how to conduct a cost of supply analysis that's really key to understanding how they set up their tariffs and how they should structure their wheeling tariffs. Also, based on a desktop analysis, we were able to highlight that many municipal distribution licenses don't have a specific explicit provision requiring non-discriminatory access, like in the case of Cape Town or Eskom's distribution licenses. And although these municipalities are required to provide non-discriminatory access when looking at the provisions in the Electricity Regulation Act, they have typically been leaned on that the omission of this explicit provision in their distribution licenses um, uh, means that they are not obliged to provide third parties with the access to these distribution systems. So um, again, a key factor we believe that would need to be addressed. It is recommended that NERSA then amend these municipal distribution licenses to include an express stipulation similar to that in the Eskom and the City of Cape Town distribution licenses in order to enforce this principle of non-discriminatory access. Section 14 of the Electricity Regulation Act specifically outlines what those license conditions need to be when the regulator um, uh, authorizes the distribution licenses, and we believe that the non-discriminatory access must be one of those listed conditions, and that section 14 would need to be amended in order to specifically stipulate that non-discriminatory access needs to be a specific license condition. Network and grid risk in the wheeling transactions. We understand that the IPPs are facing, when concluding bilateral PPAs, the risk associated with availability of the network, and that these, especially in the cases where the generator and the off-taker is not co-located. The principle of network risk is also defined in the regulatory rules of third-party generation as published by NERSA. Eskom has indicated that they will not provide any performance guarantees or take financial liabilities for the availability of the network. Again, this is something that we think needs to be revisited going forward, and similar to the approach adopted by Morocco. As I mentioned earlier, a good example of such enforcement is the case of Morocco, where grid access agreement is signed between the Moroccan the distribution system operator, and that the energy not delivered is then that tariff is then paid to the electricity generator, where there is the risk that the network is unable to provide and transmit the electrons from the generator to the off-taker. Wheeling framework and charges, the use of system charges. The charges are regulated by NERSA, and the principles for tariff setting are clearly defined in the ERA and its associated regulations. The revision of this framework for the calculation of the use of system charges that would provide guidance to the market as to how these tariffs would evolve in the medium or long term would be necessary, according to us, and to allow IPPs and off-takers to better define their business cases and enable the conclusion of bilateral PPAs. Then we get to some of the tariff setting guidelines for the municipalities that we've been able to come up with. It's necessary to make the distribution tariff methodology as set out in the distribution code rather the requirement that is that they are obligated to follow these methodologies rather than just a guideline, and unbundle the retail component of the tariffs from the other components. Again, the concept of unbundled tariffs being key here. Eskom would need to develop an imbalanced pricing regime similar to the system in India and in Namibia. The system must reflect the cost to Eskom for balancing the deviations between the energy scheduled to be injected or withdrawn from the network on an hourly basis and the actual energy injected or withdrawn. And then, as stated in the electricity pricing guideline, clause 2.6, the total cost to operate the network must be reflected in the various use of system charges, and no additional charges for wheeling should be levied unless the wheeling action introduces incremental costs. Again, it is recommended based on this that unbundled tariffs are developed. An unbundled or an explicit use of system charge approach is a cost-neutral approach that requires an understanding of the cost involved in maintaining the actual distribution network. And then the electricity pricing guideline mandates distributors to perform cost of supply studies every 5 years to inform their tariff recommendations. Um, Under this approach, customers that receive wheeled electricity pay an explicit use of system charge for each unit of wheeled electricity. The charge should equate to the municipality's existing retail tariffs less Eskom's electricity purchase costs. Again, this links back to that requirement for municipalities to undertake cost of supply studies, and we believe that as part of understanding what wheeling charges and wheeling framework should look like, municipalities must be provided with clear guidance on how to actually undertake these cost of supply studies, which is currently lacking in a lot of the smaller municipalities in South Africa. So in summary, some of the actions in terms of the municipal participation, we've tried to unpack this in sort of prioritizing them from actions that can be done immediately versus something that can be done in the medium to longer term. Obviously, we understand that the introduction of the Electricity Regulation Amendment Bill would be one of the key aspects that would unlock the wholesale market and would also facilitate wheeling in South Africa. But we understand that given the current process that the bill needs to go through, that bill is still going to take at least a year or two to get to a point where it's actually promulgated, unless it's expedited through Parliament. We don't believe that that's going to happen, given the recent communications from the Portfolio Committee on Energy, that there is quite a lot of pressure to get this bill through Parliament, quite a lot of pressure to get some other bills through Parliament as well, and that there is the risk that the bill might lapse when the current parliamentary term comes to an end due to the elections. So there is a real risk that the Electricity Regulation Amendment Bill, that's really the crux to unlock the wholesale market and also increased wheeling, won't be passed within the next year or so. And for this reason, we think that there is some other actions that can be prioritized in the short term. Firstly, to amend the third-party network charges rules to include a framework for the non-discriminatory access by third parties to the Eskom transmission and the Eskom and municipal distribution grids. Secondly, to amend municipal distribution licenses, as I've mentioned, to explicitly require municipalities to provide non-discriminatory access to third parties, and then possibly to also introduce subsidies to enable cross-subsidization where wheeling has resulted in reduced municipal revenue to ultimately benefit the off-takers, specifically the most vulnerable communities. Actions related to market reform. We believe that if the bill can't be passed within the next year, there is still a need to expedite the unbundling of Eskom and to also develop the skills within Eskom to cover, for example, aspects associated with the implementation of an imbalance charge and some of the aspects related to wheeling. There will also be a need to introduce incentives to increase wheeling energy deployment, renewable energy deployment and wheeling, as we've seen in the case of the US and also in the case of India. These incentives generally result in the increased uptake of renewable energy technologies, but then also result in the associated wheeling being supported. Then, as I mentioned, the promulgation of the Electricity Regulation Amendment Bill, and to elaborate on the role of NERSA in relation to wholesale markets. This must include the regulation of billing principles and NERSA's authority in this regard to be able to look at what these wheeling tariffs need to be and make sure that they are competitive. Publish the necessary rules and regulations associated with the operationalizing of the wholesale electricity trading market and the associated trading platform. As I've mentioned, the promulgation of the bill alone will be great, but there's still a lot of work to go into implementing some of those provisions. The actual establishment of the trading platform itself will take a few years, and we've also in discussions with the various stakeholders we understand that for the actual competitive market to be established as envisaged under the amendment bill, it will at least take another 5 to 7, even few years longer for an actual competitive market to be established. Given those timeframes, this is why we believe there are more immediate actions that can also be taken in the interim to facilitate wheeling. Actions relating to tariff setting, we want to ensure that the wheeling charges are based on an entry or exit charges rather than linked to theoretical path of wheeling. As we understand, the path of wheeling is not necessarily where the electrons are generated and then end up with the off-taker. Wheeling is more of a financial transaction rather than the actual transmission of the electricity itself. We believe that there needs to be amendment of the third-party network charges rules to explicitly provide for the appropriate tariff setting, which include the unbundled tariff setting. And the key here will be that there needs to be guidance on how those unbundled tariffs are actually developed. And then the development by Eskom and approval by NERSA of regulated imbalance prices. Again, key here is that these charges would need to be developed in order to accommodate imbalances in the distribution and in the transmission networks. So that's quite a mouthful, but a high-level summary of the report that we've put together. Again, I would just like to thank Race for Africa and all of the reviewers and all of the stakeholders that have been involved in this process. It's been very informative, and we hope that these actions can then be taken forward by, for example, the National Electricity Crisis Committee, who is currently developing the national wheeling framework for South Africa. We believe that they've been very successful in what they have been doing thus far, and that the best suited entity to take these principles forward would really be the NECON committee, to ensure that they are adopted and reflected in the national wheeling framework once it's published. Kathy, back over to you.
Thank you so much, Roloff, and wow, what a fascinating report, and thank you so much for sharing with us all that detail. Clearly a lot of work's gone into it, and there are some extremely interesting lessons to be learned from the case studies you've looked at, not least in India, looking at the deviation settlement mechanism and the locational signals that they're giving in terms of the use for the hydrogen, and the energy non-livre, as you mentioned, in Morocco. So I think in looking at wheeling, as you've highlighted, one aspect is the regulation of wheeling and what needs to be done there. But it's also looking at the broader context, the implications of increased wheeling on the system, and how they can best be managed. Delighted to see your approach of taking into account also the context of the region. Clearly, Southern Africa does have the benefit of an interconnected regional grid, and the Southern African Power Pool, whose members trade amongst each other on an hourly basis, and have a lot to demonstrate, to share, and to roll out domestically. We, Africa Green Co, are a member of that power pool. We're delighted to have been accepted as the first non-asset owning member. And we've learned a huge amount from our interactions with the other SAP members, most of whom are the national utilities and are the experts in managing their grids and the challenges inherent in the wheeling of power, and the balancing of that power real time. So on that note, I have the absolute pleasure to introduce our colleague here, Mutenda Chipala from Eskom. He is a Senior Manager in Strategy Development and is all too familiar, I think, with some of these challenges being discussed. So, Mutenda, perhaps you could share with us your perspective on the evolution of wheeling in the South African context and how Eskom sees this progressing.
Yeah, morning colleagues. Yeah, so the name is Mutenda Chipala. Yeah, I'm an engineer. I'm in pricing the wires, pricing the electrons in Eskom. And yeah, wheeling is interesting, and we evolving it. So what I'm going to take you through is what we're doing at Eskom in collaboration with Vodacom to evolve wheeling. To recap, what we have is what we call traditional wheeling, is the current wheeling mechanism, which effectively credits the customer's account. So the current wheeling mechanism credits the customer's account. Hence, we need to amend the agreement. We're amending the customer's agreement to be able to credit this customer's account with the wheeling credits. Yeah. However, this mechanism has got its own weaknesses. One weakness is it doesn't account for a scenario where we've got multiple tenants to multiple tenants, a number of generators to a number of loads. And also, it's currently limited to medium voltage and HV connected supplies. Why is that? I think this is only because of limitations to how we use technologies, etc. But I think we have been able to address this. And the current mechanism doesn't allow for a scenario where there's traders. I mean, there's interest in traders to assist with the wheeling. The current mechanism only accounts for a relationship between the IPP and the supplier and the customer and the utility. So it doesn't take into consideration that there could be traders coming into the market. And to some extent, the current mechanism has its own limits as far as what we can do in the municipal space. So we have partnered with Vodacom, and we think we have been able to address all of these limits. So what basically we're doing, the only thing that we're doing is we're removing this red circle from the load side. We're taking it to the IPP side or the corporate entity side. That's what we're doing with virtual wheeling. Nothing more, nothing less. And then we're supporting this with what we call a data hub, a platform. So what this is going to enable us to do is it's going to enable IPPs to wheel to many customers, many entities that are connected on the Eskom network, including municipal networks. So an IPP could wheel to many pick and pays in the municipal network, Eskom networks, many hotels in the Eskom municipal networks, including those that are connected on the LV network. So what this mechanism does is it provides wheeling to all entities. And then my wish before I retire is this should be also extended to residential customers. It's only about how we use the data hub and then how we use the technology that is available to us. So we're evolving wheeling to virtual wheeling. We won't be crediting the customer's account, but we'll be crediting we'll be making an actual financial payment to a corporate entity that has a relationship with the IPP. And then this will enable us to extend this wheeling concept to customers that are connected on the LV network, including customers in the municipal network. And then what is important is that this is not going to impact on the municipalities financially. Zero, nothing. There's no impact on the municipalities at all. The municipalities, the customers will continue paying their municipal accounts, full stop. The municipality will continue paying their accounts to Eskom, full stop. So there's no financial impact on that side of the world. And then what Eskom is going to do is it's going to credit the corporate entity or the developer. And then what this enables us to do is it enables now Eskom to enter into relationship with traders, you know. Currently, we only enter into relationship with IPPs in terms of connection and use of system agreements, loads in terms of amendment, electricity supply agreements and amending those supply agreements. But what virtual wheeling now will do is Eskom can enter into a relationship with a trader who's acting on behalf of the corporate entity, of the IPP, or also acting on behalf of these millions and millions of customers, you know, your Checkers, your ShopRite, your Caltex Garage, who are interested in this net zero emission world, you know. Yeah. So these are the key differences. We're evolving traditional wheeling to virtual wheeling. We're moving from providing wheeling to HV and MV supplies to include LV supplies. The relationship is evolving from a one generator, a one customer, too many generators, too many customers, from one to one to many. We can do this because we've got that now, the technology. We won't be contracting with individual customers like what we are doing currently, but we will be contracting with a trader who's acting on behalf of many Caltex garages, many Pick n Pays, or a corporate entity like Vodacom, you know. With traditional wheeling, we're amending the electricity supply agreement, and we know why we're doing this, to be able to credit this account. But on this side, there's no need to do that, you know, because what we'll be doing is we'll be making the actual payment to the trader or the corporate entity. So this is what we are doing in this world. And we've partnered with Vodacom. We're building an aggregation platform. The aggregation part of it is complete. So what Vodacom and Eskom are working on now is the settlement platform of it. Effectively, what this does, it takes the data, the green is the data. It takes the data from your many cell phone towers in the case of Vodacom, or your many hotels if you are a hotel interested in wheeling, and it takes that data into a data hub, which we call a virtual wheeling platform. And then also on the IPP side, the data gets sent to the data hub. And then in the data hub, the reconciliation is done. And then once the reconciliation is done, that information is used by Eskom to settle to pay the trader, or to pay the corporate entity, or to pay the IPP. The same applies to customers that are connected on the municipal network. The principles of the wheeling platform are as follows. There'll be obligations for the buyers. There'll be obligations for the trader. So the trader, what they are required to do, they could be aggregating your millions and millions of ShopRite, of Checkers, metering points, and then sending that information into the data hub. So these would be the obligations of the traders, of the buyers. And then on this side, then these would be the obligations of the utility, which is Eskom. Eskom's obligations would be to take this information from the trader, from the buyers, and aggregate it into time of use and calculate a wheeling settlement. The same can be done on a municipal space. The municipality doesn't have to invest in infrastructure if they want to do virtual wheeling. They can use the same infrastructure that Vodacom has and Eskom has developed, because the principle is this has been developed as a public good, you know. So it's a public good. Any entity in South Africa can use this public good without any financial burden to them, you know. Yeah, so these are the developments in this space. Basically, what we are doing, we're removing this red circle. We're placing it on this side. And then what this will enable us to do is to provide wheeling to millions and millions of LV customers. And it will make the administration of wheeling very easy, because now what we have is we have what we call the data hub. And the data hub is for everybody in South Africa. It's a public good. No, you won't be charged for this. So, Chair, this is what we're happening. This is what is happening in this space. Also, if you want to remain in the traditional wheeling space, you are welcome. What we're doing in this space as well is we're creating something called a portfolio wheeling. So you can still use traditional wheeling with a portfolio of generators wheeling to a portfolio of loads, Chair. Thank you. So interesting times ahead. Thank you.
Absolutely, very interesting times ahead. Thank you so much for elaborating on the evolution within Eskom and the advent of the virtual wheeling framework. You've made it very clear the advantages that brings and the added flexibility that brings, facilitating the role of traders and looking at a multi scenario. I have many questions, I must say, but I'm conscious of time and also would like to give the opportunity to the participants today to ask questions to both of our excellent speakers today. I see a few questions are popping into the chat, and also feel free to raise your hand and we'll see how many questions we can turn to. I think the first question is probably for you, Mutenda. I don't know if you can see the chat there. We have a question as to the financial implications of virtual wheeling and the role of Eskom in making the settlement payment for the wheeled energy to the buyer. Are there any thoughts you'd like to share with us on that risk that may be perceived by the market?
Yeah, so it's definitely a risk, and we're looking at different ways of mitigating that risk. For instance, we could look into escrow accounts where the energy-related payments are what's the word? They get paid into a non-Eskom escrow account, and then from that escrow accounts, then wheeling settlements gets made. So then that mitigates the risk associated with the financial stability of Eskom. So that's one way of looking at it, which is currently being explored. If you think about it, I mean, in a market context, in a market environment, buyers of energy, they don't pay utilities. The settlements get handled by banks, and then that risk of utilities on the utilities, is removed. So this is what we are also exploring in this world. Yeah, thanks.
Thank you. That's very helpful. And I think the next question is probably sort of similarly on the financial front, with regard to municipalities who are themselves in default with Eskom, and whether there's scope for the virtual wheeling framework to also apply in that context.
Yeah. So how this works is the customer pays the municipality. The municipality pays Eskom, and then Eskom takes that payment and pays the corporate entity or the trader or the IPP. So if Eskom doesn't get paid, then where is Eskom going to get money from, you know, to settle with the corporate entity or the trader? You know, so everybody in the value chain must pay everybody, you know. The customer must pay the municipality must pay Eskom, and Eskom must pay the trader, or else Eskom will be left in a black hole, you know. So hence what we're saying is to remove that risk of the black hole, then it's best to provide these two municipalities that are in good standing, you know, because what we're effectively doing is the energy purchases by the Pick and Pay, by the hotel. We're just taking those energy purchases and giving them to the supplier of the energy who's the IPP. Effectively, that's what we are doing, you know. So if the energy payments from the customer side disappear into the black hole, then where is Eskom going to get those those payments from? So hence we're saying we're only going to deal with the municipalities that are in a good standing. Yeah, but there's initiatives in this space. NICOM is looking at a number of issues to resolve this risk. Yeah, thanks.
Thank you. Yeah, clearly challenges there, and it's essential that Eskom is not put at further financial strain through the processes, clearly. And perhaps we could look a little bit more around the issues around flexibility. I think it's clear from your presentation that there will no longer need to be an amendment to the electricity supply agreement side of things. And you talk about the relationship with traders, and we heard from Roelof as well, the rising importance of traders, and clearly it's a market that that we at Greenco and a number of other participants in South Africa are evolving into and growing into. And so in terms of flexibility, then how do you see the communication flows between those traders and Eskom with regard to where the power is going? Do you see that shifting to a more granular approach? I think at the moment with the corporate PPA market, we see that the reconciliations are done monthly, whereas if we look at the Southern African Power Pool, for example, then it's hourly. Where's your thinking around the evolution of the market and the visibility that Eskom will have? I think traditionally, particularly with intermittent generation, intermittency was a small component of the total power, and perhaps therefore easier for Eskom to absorb. But as that proportion of the total power flows increases that comes from the intermittency, then one would think that more visibility around the power that is due to be injected and withdrawn would assist Eskom in balancing. I see you've got a great slide here. Perhaps you can talk us through.
Yeah, thank you. Excellent question. So we do this in bite-sized chunks. So the first phase is we introduce virtual wheeling. The settlements are done monthly in time of use. However, the data is available for every 30 minutes. 30 minutes. So then the next step would be then to look at imbalance issues, imbalance tariffs like Namibia, or an imbalance mechanism which is proposed in the era, and then once we have evolved to the imbalance, addressing the imbalance aspects, then we can look into the settlements on an hourly or a half-hourly basis, So my proposal, my suggestion is we do this in small pieces. We only chew what we can, not the whole elephant. The first step is we do virtual wheeling, and then we settle a monthly in time of use with no balance tariffs, no balancing mechanism. And then once we are confident that the tool is working properly and everybody is properly capacitated, then we go to the next phase, which is phase 3. Phase 1 is traditional, phase 2 is virtual wheeling, then phase 3, we start looking at the imbalance aspects, you want to supply your Pick n Pay with energy, but you are not available because you didn't pay your staff bonuses that December. So your plant is off. So there's an imbalance and somebody must provide that balance. So then we can look at the mechanism to balance and charge you for that imbalance in every 30 minutes. So for me, it's an evolution, First phase, traditional, second phase, virtual, third phase, we incorporate imbalance aspects in 30 minutes because we have learned, So that's how I would approach it, yeah.
Thank you. In the absence of any further questions coming through or hands up at the moment, I'll take the opportunity then to ask some more. I think looking at the lessons learned that come out through the Res for Africa report and the experience in some other countries, there are some other tools that have been used in terms of wheeling, such as the locational signals that were highlighted in the Indian case, where there are locations of fantastic resource that are more remote from some of the load centres. Is this aspect around locational pricing something that Eskom is considering? Sort of aware that some of the same challenges are in the South African geography as well.
Is that for me or just general?
It was for you. It was for you if you have something to share.
Right.
Otherwise, I'm also happy to open it up to thoughts from the floor.
Yeah. So my thinking is we must do things very slow. Bite-sized chunks. So the first step is we don't go for locational marginal pricing to reflect the congestion issues and to reflect the scarcity of generation and to reflect the losses, because that's what the locational charges are for, So we should just go for a uniform market price. The congestion issues can be addressed through other mechanisms like curtailment payments. If there's congestion and we have to curtail you up or curtail you down, then there can be payments for that. And then once we have learned, I mean, even in other in European markets, there's no locational marginal pricing. It's only in limited markets where there's a locational marginal pricing. So the first step is to learn. One uniform price. If there's congestion, if there's losses, we'll reflect them through an easy mechanism like curtailment payments. And then once we have learned, and then we are confident that we have learned, then we can slowly migrate to a world where there's a locational marginal pricing, But in a South African context where transmission is planned centrally, I don't see us evolving into a world where there's locational marginal pricing, because transmission would be planned in a manner that ensures that locational charges between two different points, which is basically congestions, are not there. Yeah. So that would be my philosophical answer. South Africa is not ready for any locational marginal pricing. We don't even know what that is. Let's introduce the market concepts first. We learn from them, and then once we are confident that we understand the market concepts, then we can start to evolve the pricing to have a congestion aspects, which are locational aspects, to have the losses aspects, which are locational aspects. But for now, I think let's use simple instruments, which are allowed for in the Greek code. I mean, the Greek code allows for payments for curtailment. I mean, it's there in the Greek code already, So let's use those simple instruments, yeah. But this is not an ESCOM opinion. That's my own personal opinion. Yeah, thanks.
Sure, no, thank you. Thank you. That's extremely interesting. And I think as came out through the report as well, there's sort of two sides to the story. And you're looking on the one side at the need to keep ESCOM whole with regard to balancing energy, recognizing that there is a cost in maintaining the reserves to ensure the system stays in balance, and that should be reflected and remunerated. And then on the flip side, ESCOM, as the owner and operator of the grid, is the only party able to do anything to mitigate the sort of grid challenges. I think Roelof was commenting on the energy non-livre in Morocco, and the provisions for payments where grid unavailability exceeds the stated thresholds, but the current reluctance of ESCOM to adopt that as a policy. Is that something that you're able to elaborate on? So that both sides of the coin, it clearly needs to be sustainable and fair for all parties.
I can't, but I think that has been addressed already in the connection and use of system agreements for the IPPs that are selling through the government program. That issue has already been addressed. There's I think 3% unavailability on the distribution side, or I could be, my numbers could be wrong, but there's a percentage for the availability of the transmission grid and the distribution grid. And then if it's not available, then the IPP gets compensated. So that mechanism is already there in the South African context, But I would prefer to, let it be answered by the people who are knowledgeable in this space. But in my understanding, it is there. Maybe your question is, why is it not extended, to other categories of generators? Maybe that is the question, yeah. But it is there. And maybe the question is, maybe the percentages that are there, maybe the industry is not happy with those percentages, But in the connection and use of system agreements, there's grid availability issues. And then if the grid is not available for X percentage of the time, then the IPP gets compensated, Yeah. And then obviously going into the future, we're going to have a curtailment and payments for curtailment, So I think that the issue is being addressed, Yeah, but that's my opinion. It's not an ESCOM opinion. Yeah, thanks.
Thank you very much. So I think there's one more question in the chat, and then I think it's soon time to wrap up the session. So Vic is asking, do we require? So we do require a mechanism that sends investment signals to where generation is needed. And querying whether curtailment mechanisms do this sufficiently. Mutenda, anything to add on that point, or anyone else who would like to contribute, please do feel free to put up your hands and speak to us.
Yeah, so one of the document you referenced, which is the third-party framework by NERSA, there's a map in there. And in that map, it shows the use of system charges for generators connecting at different locations, And then currently that use of system charge is 0 for the Western Cape, Eastern Cape, and Karoo region, So basically, I think what that use of system charge is doing, it's sending a locational signal that the generators must locate in that area. I'm not going to talk about grid availability issues, etc. And yeah, so the use of system charge to send generators to the correct areas is there for both network and for losses, you know. So IPPs, generators that are connecting in the Western Cape, in the Eastern Cape, etc. They don't pay use of system charges for transmission. They don't pay losses charges in those areas. So it's a locational incentive, you know. Over and above that, if you're connected on the distribution network in that region, you get a rebate, you know. So the use of system charge signal, it's already there. And then what is currently happening within Eskom is being revised. That use of system is being revised to talk to the latest developments, etc. And then once the approvals are there, it will be taken through NERSA, and then it will be taken through the public consultation process. Yeah, thanks.
Fantastic, thank you. Mutenda, you're clearly an absolute expert in all of these matters, and you know, a lot of thought is going into the complex aspect of how to stimulate, you know, more wheeling, but in a sustainable manner. So thank you so much for that excellent contribution, and thanks again to Roelof. And let me hand back to wrap up the session. Thank you.
Thank you. Thank you, Kathy. Thank to all of you. Just, I mean, a final greeting and thanks to all the contributors of our session today, and generally speaking to all the participants. As you can see, we posted the link to access the full study on the chat, so feel free to download it and to let us know what if you have any comment on this. We are more than happy to further discuss this topic with all of you. Thank you very much again, and enjoy the rest of your day. Thank you.
Thank you.
Thanks.
Thank you, everybody.
Bye everyone.